Strategy. First off, to Trish. Hey, Trish. The dollar in focus, under a lot of pressure this morning. What's going on?
Well, there's two factors. Aside from the paring back of a risk aversion, we have traders scaling back interest rates expectations on the U.S. The dollar index tumbled 1.3% last night, and that was the biggest fall in 1.5 weeks. The key theme was news that U.S. Treasury may allow up to 10 banks to pay back the TARP funds, and we had U.S. Treasury Secretary Geithner commenting about the U.S. banking sector and how it's improving, and he also commented on signs of stabilization in the global economy. So what all this has done is actually it's improved risk appetite, and it's also eased dollar funding concerns. Now, dollar funding shortage was one of the main drivers for the greenbacks rally last year, and now we have traders scaling back on that. And finally, we have traders also scaling back expectations of a Fed hike this year. Now, earlier this week, there were actually some talks that the recovery in the U.S. economy by September may actually spur the U.S. Central Bank to raise rates as soon as the fourth quarter. But traders are now having a lot of second thoughts about this, especially after a Fed official said last night that although the U.S. economy is resuming the growth, the job market would take a longer time to recover, and he doesn't expect that the Fed would need to change its policy at the first sign of recovery. There were also some pretty encouraging numbers out of the UK, and this actually propelled the sterling pound forward. The sterling was one of the best performers last night. It jumped past 1.63 from below 1.6, so that actually dragged the rest of the other currencies stronger as well.
Trish, the yuan in focus ahead of the CPI and PPI numbers out of China today. I mean, I spoke to a guest this morning. She says the risk of inflation is very low.
Yes, traders are not so much focused on the inflation, but on the deflation theme. They want to see whether there's further deterioration in the price contraction. And at the moment, it seems that this may not be the case, given the signs of stabilization in Chinese demand. So traders will be watching that very closely. Implications for the yuan is actually quite limited, but the implications for the rest of Asia Pacific that sells to China is quite considerable. And of course, we're talking about commodity currencies as well, like the Australian and Kiwi dollar, and not to mention those that trade very closely with China, like Singapore and Korea and Taiwan. These are very open economies, and they sell a lot to China. So these currencies will be latching on very closely to them. They're all stronger across the board this morning, thanks to U.S. stock markets, which has actually led up the Asian bourses. So traders are expecting a stronger day ahead, actually, for Asian currencies.
Well, 2 days left for the week. I mean, what factors are we factoring in?
Well, traders will be looking very closely at the U.S. numbers, actually, the ones that will be coming on later this week, as well as those in Asian economies. Basically, the theme is whether a stronger signs of green shoots in the U.S. will actually lead to a stronger or a weaker dollar, and that's a debate right now. Traders are saying it actually may lead to a weaker greenback, simply because when the global economy is doing well, it tends to lead to outflows of funds from the U.S., and they expect that this is going to be the case. Not to mention as well demand for commodity currencies. That's expected to lead on to feed in from the global demand story. So, yeah, that's what traders will be looking at. Back to you.
Trish Louie, thank you so much for that.